The price of Bitcoin has bounced from a major crucial support level on the higher timeframes that will be explained in today's episode. However, we are still forming lower highs and lower lows throughout the last few days. I'm going to explain the level that we need to break to be pretty confident that the price is actually going to go to higher levels. Now, the level of support that we have been bouncing from the last few days is basically back testing the lows from July, as you can see here on the chart. We have repeatedly back tested all the lows that we formed throughout the last few months. We had the breakout, we move up, we back test it, we continue to the upside. We are seeing that back test live now throughout the last few days. We'll be talking about the different setups, guys, that I'm looking at, signs of strength, good levels of support and resistance. So make sure to stay tuned. Now, if you are interested in trading, remember that you do get those airdrops, free airdrops on Bybit, guys. You got a $500 one to trade Bitcoin, Ethereum, Solana, Pepe. Make sure to claim it, guys. It's a free position. Check out the link down below in the description to claim that airdrop on Bybit. If you cannot trade on Bybit, well, I would suggest bluffing because it's a no KYC and you do get 10% cash back from your initial deposit to use for your trading. Let's dive in right away, guys, because yes, we are bouncing from that low from July. We are getting a reaction, at least. As you can see, we had a major drop on Friday and we are holding those July lows. Now, for speculation on the higher time frame, we do have that diamond bottom reversal pattern, okay? That looks pretty good when we do take a look at the higher time frame, right? You got those higher highs, lower lows, lower highs, and higher lows right now, back testing the July lows, looking for a possible reversal in the next coming days. But we're definitely not out of the woods yet. I'm going to explain the confirmation level to believe that we are going to get more momentum. It's a very crucial resistance based on lower high price action that we formed throughout the last couple of weeks. So it's very important to break this level that will be explained. But let's zoom out here on higher time frame and just explain, hey, we are still very much on track here with this bull run. And you may ask, well, why do you believe so? We are basically getting this choppy momentum downtrend channel for the last 4 to 5 months, right? It does look like it's over. We got the recession. But let me just talk about the timing of the impulsive moves and the corrective structures that we formed throughout the last 2 years. Now, when we bottomed out here in November of 2022, we had this clear impulsive move to the upside in a 5-wave move. And we also had this very large 4-5 month corrective structure in an ABC flat, coming here to the highs to test the range, coming back down to test the lows of the range, and then finally getting that rocket to the upside. Let's talk about this corrective structure, the timing from this wave 2. If we do take a look at the peak here from April of 2023 at the $30,000 range, and we get Fibonacci time from the peak high to the peak low of the 10th of September, right, from this corrective structure, and we take a look at the timing right now and compare it with this corrective move. Now, we only just crossed the 1-to-1 a couple of weeks ago. And if we are speculating that this is a wave 4, wave 4s are usually much larger than a wave 2. So we only just crossed the 1-to-1 time extension just about 2 weeks ago, okay? So we are still very much, wave 4 can be twice as long as a wave 2. So regarding the timing here, it still looks pretty good. It's just longer in time because wave 4s are usually longer than a wave 2. Now, when we do take a look at the impulsive move, right, when we're speculating that this is a wave 3, it's a very powerful wave that we had from late 2023 entering into 2024, right? So if we do take a look at the timing from the start of this big major impulsive move on higher time frame, taking a look at that pivot low from the 10th, 11th of September, where we did form that low, to the high of the peak, all-time high on the 14th, 15th of March, we can see that we haven't crossed the 1-to-1 extension. And usually the corrective moves do take longer than the impulsive move. It doesn't always have to be like that. I'm saying it's very common to cross the one-to-one extension in time, okay, when you are correcting. A minimum timing is the 382, which is this red vertical line on the chart. But a lot of times you do at least cross the one-to-one timing, right? So for the moment, we haven't even crossed that level. The impulsive move that we had from September all the way till April, right? Entering into April of 2024. Many months right there. We're just still very much in this corrective structure, still inside of the timing. If we would have extended 2 times here longer and we're still in a downtrend, then I would say, okay, guys, this ain't looking too good. The downtrend could continue down, right? So overall, looking at the timing, we're still very much on track on the higher time frame. The bulls are definitely defending that level of support, backtesting the July lows. And we also have that diamond bottom reversal pattern, okay? Not one of my favorite patterns, but overall, we cannot deny that this is definitely a possibility as we backtesting those lows from July. So let's zoom in on the lower time frame. Let's zoom in on the 1 hourly and analyze this bearish market structure. We did get that bounce here on Friday from those lows of July and just gently tapping the 7/8 Fibonacci, as you can see here on the chart. So getting that bounce at the 7/8 at $52,500 just on Friday, the 7/8 Fib with those lows, getting the reaction, moving to the upside throughout the last couple of days. So what level do we need to consider here, zooming in, that we do need to break? And it's pretty simple. It's just breaking the last lower high from this bearish market structure that we formed throughout the last couple of weeks, right? Where you are forming lower lows and lower highs. You got a lower low right over here and a lower high right there. And this has been the last lower low. So you can see here, just on Friday, we did create a lower low, meaning that this is the last lower high on the structure of the last 2 weeks of price action. So that is basically $57,000. Getting above $57,000 could definitely be a good sign of strength for a big reversal to start sweeping up all of those lower highs that we have created throughout the last 10 days, getting all the way up even to $61,000. The moment we break above this lower high, I would strongly believe that we've broken the bearish market structure, even though if it does create a swing failure pattern from this high, which I do think is very possible. There's a lot of Fibonacci confluence at the $57,000 range. We also have a weekly naked point of control. Last week's price action, when we get the naked point of control, it is exactly at the $57,000 range. When we start getting Fibonacci retracements from the high of this impulsive move down, we can see from the highs here at $65,000 to the low, we do have 382 Fibonacci, slightly above 57,000. If we get this pivot right there to the low, we do have 50%, which is also round about the $57,000. When we do take a look at this pivot low right over here, okay, and then place that Fibonacci retracement, we can see the golden pocket is exactly at $57,000 range. So we get in all of the pivot lower highs that we have here to the lows, and there's a lot of fib confluence, as you can see, from the last lower high that was formed here on Friday. So without a doubt, yes, this could definitely get a swing failure pattern reaction. We've got a lot of Fibonacci confluence. It's the first lower high before the major drop. I like it, guys. I will very likely look for a short scalp at that level. But overall, I would be speculating on the possibility of a higher low and the change of the structure. Just getting above the $57,000 for me is going to be a sign of strength, and I will be flipping bullish, and I will be looking for longs on the retracement. Okay, looking for shorts here, looking for longs here. There was a good long position also during the weekend, which I'm going to explain right away. We had the major drop here. We formed a nice, bounce, dead cat bounce. We formed a 3-wave structure, classic for an ABC. We were hitting the value area low from the range of the weekend, okay? When we do take a look at the weekend range, just hitting that value area low and the 50% Fibonacci. And without a doubt, if you're speculating on the possibility of forming a larger ABC to the upside or a 1, 2, 3, right? We could be inside of a third wave right now. This was the chance right over here, as we were also forming bullish CVD divergence on the rest of exchanges, guys. When you do take a look at CVD, you were forming very aggressive lower lows on the blue here, which is basically all of the exchanges except for Bybit. Okay, so a lot of people aggressively getting into shorts right there, believing that this is a dead cat bounce and you're going to start rolling down. But if you do your analysis and take a look at the levels and, you know, basically the confluence zones, it was the value area low of the range between Friday and Sunday, and you're hitting 50% Fibonacci, and you're already forming a three-wave structure. So without a doubt, yeah, even a failed auction from this low is a good long position without a doubt. And you can speculate, right, for the ABC wave and continuation back down, or possibly forming a wave 1, a wave 2, hitting the 50%. And what if this is the wave 3? Well, you want to be in that long trade, right? Because this could definitely be a local bottom for the next coming days. So getting a pullback down here is going to be interesting without a doubt. I do think that as long as we are below these pivot lows, guys, just looking at the range locally, as long as we're below these pivot lows, I do see the bearish momentum. We do have the lower high resistance trend line that is kind of breaking out. We got the breakout. We were back testing the value area high of this range. So the bulls do have a chance here, right, to form that wave 1, 2, and 3 and start getting above $57,000. I have to say that it's definitely possible. If we do create some choppiness here, this could still be a lower high. We're not overlapping the lows here from Thursday and Friday. So this could just be another lower high and then start breaking down. Then we need to come to the conclusion that this has been an ABC move and we're coming back down to the lows. Anybody that did not long here this level, I'm going to give a little bit of hope to the bulls right now, because if we do retrace all the way down here, I have to give a chance to the bulls, being this a wave 1, wave 2, and that we could still form a double 1, 2, meaning that we are inside of a third wave here, and the price is going to get that explosion in the next coming hours. Even though if we do correct down, of course, it's going to be very, very difficult. But overall, we would not want the price to overlap the 7/8 Fibonacci from this pivot low to the pivot high that is created, right? Getting in between 50% and 7/8. Only if we do form insane bullish CVD divergence, I would reconsider another long position here. But the best long, without a doubt, would have been this swing failure pattern from these lows of the weekend. And this is why I entered that long position to speculate to the highs. But without a doubt, leaving some of that position open. I did enter a short at this area, speculating on an ABC, but already got out from that short trade, realizing the possibility, sign of strength, a double 1, 2 in the next coming hours, right, and days, right? We could be just flipping here. The lower high resistance, kind of a little bump and run setup right there. So just realizing that, hey, not liking the short trade right now. We could be in full reversal. So happy to maintain some long positions or even re-enter a long position if we do get a corrective move down in the next coming hours and start forming some insane bullish CVD divergence, right? Get those lower lows on the price action, on the CVD, and form higher lows right there. If we start correcting down and we get some very aggressive lower lows, then it's going to be game on. I will be speculating on that double 1, 2, 1, 2. We're inside of the third wave. Not much more has to be said, guys. I'll be doing a live stream later on. And if you want more updates, what's happening locally from me and the rest of the coaches, you do have the Discord. It is the first link down below in the description, and I will see you there.